Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday, and it's November 3rd. This will be our chart lesson for today, and this is going to be a really quick chart lesson because there's just not any trades today. This is probably one of the slowest days that I've seen in a long time, and I think probably what's going on is people are just waiting for this FOMC announcement, which is what you see here in the blue, the big, and that's what caused this volatility. And a lot of times just coming up into that announcement you'll get a real tight congestion area or something, but really this whole day was like that, and there's just not many trades in there. It's not a clear. I mean, really by late afternoon you might have moved this down to here because that's where most of your resistance was, but you still don't really get any real good setups. So um, this looked like to be a decent setup here, but my signal bar is not good enough. So we'll zoom in here and look at it a little closer. And that's how I would have ended the day with this. But if you go back to the original range, which is using the overnight highs and lows, using the closes and the most touches, this is the interesting part. You can see that even during the news item, the price action still works. Notice that the measured move up on this range is this dashed blue line, and look where prices went to during the news item, that the high volatility. It went a perfect measured move, backed up, retested the close from yesterday, and then took off again. Really kind of retested that close and retested the resistance that acted as support, and it took off again. And the thing continued higher into the close. So it shows you that even though you got to be careful because of all of that volatility, the price action still works, even in high volatility news items. And I can show you that over and over. So it's a good opportunity to show you what's really possible. But yeah, this is an FOMC rate announcement day, and those kind of days, you basically you want to be flat an hour going into those at a minimum, because you'll get stuck in something like this right before the news comes out, and then you have no way to get out of it in most cases. A lot of times it'll look just like this right up into the news, and there's no way to, you'll get chopped to pieces, and then you're stuck, and then all of a sudden the volatility hits and you get stopped out. So anyway, let's zoom in and talk about the trades. It won't take long because there's not many, and we'll wrap this day up. But 7 o'clock came just as we're making this little move up right here. And you might have looked at that as a first entry, second entry, so a failed second entry. But if you look at that, that's really only one leg down, and then there's your next leg. And so it doesn't look like two legs that failed. It just looks like a first entry to me. And so your second entry doesn't really come to down here. And that's not, it doesn't set up right. This one doesn't really set up right because it pushes back through and closes on the other side. So if you took that one, I probably wouldn't argue too much with you. I would definitely say it's aggressive. I'm not going to mark it though. I just didn't like it in real time, and I don't like it now. You can see that it worked, and you would expect maybe to get another leg down there, but you definitely don't have two legs down to take that as a failure, and you need to wait on a second entry after that point. So you do get a first entry and a second entry here, but look at that congestion right across there. I originally had this a little lower, but I moved it up. I originally had it like right here, and that might still be correct. You get a little failed breakout at the high side, a little failed breakout, and then you get this big breakout. But there's just not room in there to really do anything. If you took that second entry, it would have worked. You would have had to ride all this out. You could argue probably for it to be aggressive, but when you see 4 bars like that in a row, and one of them has that little body, anytime you get 3 or more bars in a stack side by side, and one of them has a no body or a tiny body, that's congestion, and you can get whipsawed in that, and that's exactly what would have happened here. I think this I don't think there's room to get out there. Let's just look and see. I don't think there is. Yeah, it's 5 ticks. So that would be a 1 tick failure because you might have got lucky and got out on a limit order, but I doubt it. And you would have got that extra tick. Notice that it got that before it went higher. Because these second entries, if they're with the trend and the setups look good and you get a good signal bar, the only thing going against this one's that congestion. But if you took it, it works. I didn't like it. I didn't mark it. I'll at least leave it aggressive. But we fell out the bottom, but you don't want to go long on that big bar. And then you fall out the top, and you're still looking for a low, prices to make a new low, because you've got this trend working down, and that's the first break. And then, of course, we run down and make the new low, and then we bounce out of there. You might have taken this one. Again, it's aggressive. It's a huge bar. It's 12 ticks, which is pretty big for this day. And you got to go short right into the support area, although we had already pushed through there and probably cleaned out a lot of those stops. So you may take that one. Again, I don't like it. And then, of course, then you got generally you want to wait on a lower high. Of course, you don't get one there. Same thing on the breakout here. You'd make it on a higher low, and by the time you get one is right here, and look at all that congestion. You're just in another little tight congestion. And again, you might have taken this because that definitely looks like rejection. That's another one you could argue that, hey, maybe it's aggressive entry because you've got your break and a move to a new low and you've got rejection going on there. You can't enter in here. And then you get another breakout. It's almost a repeat pattern of this one. I like going short there. It looked like we may get a lower high, set up for a lower high, but we never got it. And then, of course, you just make this triple bottom here. And it's tempting to go long right here. This actually broke lower and then turned up. You might have taken that trade. It's another one you could argue to maybe it's green, but because it does start to look like rejection at that point. But this is not rejection here. It looks like it might, but it doesn't go anywhere. But this is basically a triple bottom, and then you try to go lower once, twice, and you also get a first, second entry long with a decent signal bar. Again, it's a little bit congested, but at the very minimum, you got this trend line working up, and you'll probably get a retest of that high. So based on the failure and the second entry and the good signal bar, I like that. That's the best trade we've seen all morning, actually. And so, on a really good trading day, I might skip over that. But today, if you didn't take that, you didn't get much option because there's nothing else in here. I mean, you're just meandering along up and down around the EMA, and there's just no setups there. I mean, maybe you draw this in, like I said, a little tighter. Let's try that again. But let's just say you draw the tighter one in there. But you just don't really get any setups here. Like I said, maybe this one, but the signal bar is not very good. So, and that takes you into the witching hour here, and you don't want to enter during this blue. This is about where it starts to settle back down to normal. And I marked this one. You got a new low here, so first entry, second entry. This one's kind of squirrely though. It broke higher first and then turned down, so it's an engulfing bar. So if you entered here, your best bet is don't, because it's all in one bar and it's an engulfing bar. You can't really put your stop below here because you may get stopped out on a perfectly good trade. So if it's an engulfing bar, you got to go below the last low and wait for this bar to close and then put your safety stop under that. And if you do that, it's a great trade, but it looks a little congested. I'm not crazy about it. It is a failure though, so maybe you take that trade. I marked it green. I'm not crazy about it either. And if you don't take that, you don't really get a chance to enter this. Until here, you come down, you get a first entry, and then you turn down again, and then you get when it breaks above that bar, it's a second entry long, and it's a nice bullish bar that bounces right off the EMA after a nice bullish move up. You're going to at least retest that high. You might let it break higher and drop a limit order in and try to get a little better entry, which you could have. And that pretty much takes you to a new high, and then we start trending down. but there's no real entry there. Um, there's a first entry and then a second entry, but that's just too congested. It does move on down. First, it looks like it's just going sideways, but there is a little trend there, and then you get a break, and it tries to make a new low, and it can't. And I mean, you don't want to. There's no short there really either, and that takes you into 230. There's just not anything here today. I got a couple of emails about how slow it was, but I just think people were sitting idle, waiting to see what this report was going to tell us, and that was probably going to decide whether we're going higher or lower, and in the end we go higher. Actually, from the very get-go, we almost go higher. So, interesting day, boring day really, not a lot of trades. These are the kind of days you just kind of wrap up and go home or do something else. So you get days like this, unfortunately. But I'm not going to beat around the bush. I'm going to wrap this one up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.